And this is Real Estate Underground.
Greetings and salutations, Real Estate Undergrounders. This is Ed Matthews with the Real Estate Underground podcast. Today, I am joined by Ken Gee of KRI Partners. Ken, welcome to the show. Thank you so much for your time today. I'm grateful.
Well, thanks, Ed. I'm thrilled to be here.
Yeah, I've been excited about this. As we were just talking about before I hit record, I fundamentally believe we're all basically reading the same book. And, I may be a couple of chapters ahead of somebody out there in the audience, but you're about 25 chapters ahead of me. So I'm particularly excited. You're doing what I want to do when I get good at it. So I'm grateful for your time today, and thanks for joining us.
Well, happily. Glad to be here.
Yeah. So Ken, I've been following you on LinkedIn for quite some time, and I try to pay attention to who the players are in the industry, and that's actually one of the ways we got to this point today. But for those that may not have come across you in the social media world, why don't you tell us a little bit about who you are and what you do for a living?
Yeah. So grew up in Toledo, Ohio. Got my undergrad at the University of Toledo. After that, I moved to Cleveland. Went to school at night at Case Western Reserve University, small private school.
Yep.
Got my master's degree, became an accountant, went to work for Deloitte for 7 years as a CPA, did all the fun stuff a CPA could do, M&A work and due diligence and tax planning and all that kind of stuff. And as fun as it was at that point in my life when I was very young. This is 25, 26 years ago. My daughter was very young. My son was young. And I remember it was one morning, 3:00 in the morning, and I was doing her night feeding. And I started thinking to myself, and if you've heard, a lot of people have probably heard the story before, but I loved it because it was time for her and I to spend together. But then one night I realized, wait a minute, this is 3:00 in the morning.
Right.
And this is my quality time with my daughter.
Right.
What's wrong with this picture? And I couldn't figure out how I was gonna do all the things that I wanted to do, put my kids through school without a ton of debt, all those things that young people with young families want to figure out how to do.
Right.
And it was at that point I said, you know what, I got to make some changes here. And so I woke up the next morning and then went on this endeavor. And I'll tell you very briefly, over the next couple of years, I bought 3 small apartment buildings. And all of them are less than 30 units each. And 3 years later, I sold them. Now get this, I was working at Deloitte at the time, like 80 hours a week. And 3 years later, I sold these buildings and made $500,000. And I thought, whoa, what just happened here?
Yeah.
I said, man, this is it, right? I thought this real estate thing was the right plan, but now I knew it was. So then I just didn't look back. And, I'm thrilled to say 25 years or so later, I did put my kids through school. I did quit my W-2 job. This is all I do. And we have helped hundreds of people do exactly what I've done. So
excellent. Well, congratulations.
Yeah, absolutely.
Phenomenal. And the thing is that I have just as much admiration for the money you made as you did for the decision you made in terms of your quality time, because I was actually talking to somebody earlier today, and they said, well, what does financial freedom mean to you? And for me, and it sounds like you as well, it's time, right? It's just you can use your time with your family, with your children, with your wife, with your friends, for your self-care, right? Taking care of yourself, you can spend your time any way you want. You don't have to pick up the phone and call a boss and say, hey, is it okay if I, right?
Mm-hmm.
I mean,
I didn't want to miss my kids' soccer games, baseball games, basketball games. And guess what? I didn't.
Yeah. I mean, I still have to call. I still have a boss, but I'm married to her and she likes me a lot. So she lets me get away with
there you go. Yeah.
Right?
Yeah. Exactly.
And I like her too. So Ken, in terms of the business that you're in, multifamily, you and I are in similar businesses.
Mm-hmm.
What drew you to multifamily in particular as an asset class?
Yeah. So as opposed to single family, or
as opposed to self-storage or short-term rentals or whatever. Yeah.
Yeah. Yeah. So for me, it's about risk.
Yep.
I can make a case for self-storage struggling, medical struggling, office structure struggling, retail. it's really hard for me to figure out how people don't need a place to live.
Yep.
Right? They just do. And if they
Maslow's
don't,
theory of
well,
hierarchy,
then the
or
last thing I'm
hierarchy,
worried.
right?
Say what?
Maslow's hierarchy.
Yeah, yeah,
Right?
absolutely. It's a basic need. And so that's why I go to multifamily. You can't really use the word safe in any kind of investment world,
Right.
but it was the safest, least risky asset that I could find, because I'm really a risk averse person. So that's what drew me to multifamily.
Yeah, I couldn't agree more. I mean, the fact is that when all else fails, you still need a roof over your head and you still need food, right? And
You
so,
do.
that's 1A and 1B on that list at the bottom of that little hierarchical pyramid, right?
Mhm.
And the other part of it, though, for me is, and the reason I got into multifamily is it allows us to, to help people. Like, I focus on, we buy C- buildings and upgrade them into C+ buildings with the same residents and all that. And
Mhm.
I think your business is very similar. And so that part of it is also gratifying to me as well.
It is. Yeah, yeah. We tend to see, we like the B space. We like to stick in the middle.
Yep.
Because in recessions, the bottom tier gets hurt the worst.
Yeah.
And in overbuilding situations, the top tier gets hurt the worst.
Gets crushed.
We like to be right in the middle, because there's tons of people need that, and there's not any new supply. So
yeah, for sure.
We love that middle space.
So let's talk about this focus on B class multifamily. So, you are in Ohio now. Do you focus your portfolio? Where is that?
Yeah, good. That's a great question. First 10 years, the company grew up in Ohio.
Okay.
So we had bought and sold 15 years ago. I said, man, I'm doing okay in Cleveland, no question.
Yeah.
What if I was actually in a market where people wanted to go to?
Right.
They wanted to live.
Yeah.
And so 15 years ago, I said, let's go. I'm going to Florida. And I flew to Tampa and started the process of getting to be known and, understood, and learn the markets. And, now we manage, our senior management teams managed over 16,000 units. About 11,000 of those are in Florida. We currently manage a couple thousand units, currently own several hundred. So we've never been unit builders. Right. We like to buy, add value, sell, move on to the next project. So so everything we do now, all we'll work in is growth markets. We're dedicated. We're not dedicated. We're predominantly in Florida right now, but we're very actively trying to grow into other Sunbelt states and cities where there's growth.
So it's fascinating to look at the last, even just the last 10 years of population growth. It's as if someone took the US and dumped it to the south and to the east, right? And all these people are rolling down into that Sunbelt area. And one of the things that I keep reading about, and I don't believe it, but I want to get your opinion on it,
Okay. Sure.
is that those are the areas, the Phoenixes, the Texas, particularly DFW area, Florida, particularly Central Florida. They're going to get crushed in the next recession, and it's going to be, blood in the streets and blah, blah, blah. I'm just not seeing that data. But nevertheless, there's not a week goes by over the last 6 months that I don't see someone out there talking about, the fact that the end is near.
Yeah, I don't think it is. So what's happening, remember, I've been around long enough that I lived through 08, 09.
Yeah.
So a lot of people think, because Florida did get crushed in 08, 09.
Sure did.
But it got crushed for a very different reason. The reason they did is because the lenders all ignored fundamentals.
Right.
They were buying based on some crappy apartment building being turned into condos.
Right.
And the loan didn't make any sense. It was all based on this condo conversion.
Right.
And if you remember back then, they had no doc loans. You could come in and say you made $1 million, sign the piece of paper, you got the loan. I mean, it was just ridiculous thing.
It was irresponsible.
None of that is going on now. None of it.
Right.
None of it. I mean, I could pay whatever I want for a building. You know what the bank's going to say, or the lender, or Fannie or Freddie? We're only going to lend this much, because this is all fundamentals will support. Right. So Ken, you go pay whatever you want for that building, but it's not on us, right? And 08 happened. That crush happened because the credit markets went away. Right. And they're not, because they're holding the line now. And so you're right. The fundamentals are holding up. All the right things are happening. And It's not happening. I mean, I trust me. I mean, we have a line of people. We have a property. Let me give you an example of how really crazy it is. We have a property in Bradenton, and in the month of January, we had 1,900 leads for apartments for a 232 unit property.
1,900.
Yes.
So demand's pretty healthy in Florida.
It is.
Yeah. And supply is so here.
They're not building any B-class properties, are they?
Not really. No, and not there.
They're not building any. They can't. They can't afford to. They're building A stuff.
Right.
So in my market, 1,500, 1,800, less than 2,000 a month rent. That's cool. People can deal with that.
Yeah.
3,000, 4,000, they can't afford that.
No.
You see, completely different market.
Right. Entirely different. And so, it's fascinating because, here in Connecticut, so I'm based in the Northeast, that's where we operate. And so, not only is it that, so 08 wiped out the construction class, right?
Yes,
so a lot of general contractors just never, they went on to do other things, right? They did different businesses now. And so all of that development that should have happened over the 08 to say, call it 2018 timeframe, that 10-year span, just didn't happen.
And now we're way behind.
And now we are I see numbers of anywhere from 3.8 to 4.2 million housing units behind over the US, across the US. Mm-hmm. And, it's a legitimate problem. And the fact is that I would bet a lion's share majority of those 4.whatever million housing units are B-class units, and they're not building anywhere other than the Carolinas, which I see everywhere, right? Pervasively, particularly North Carolina. I'm just not seeing a ton of B-class building happening.
Right. Yeah, they can't afford to in Florida.
Right.
I mean, they just can't.
I mean, building costs right now, on the low end, I'm seeing in the high 160 a square foot. And realistically, you're probably looking at, particularly here in Connecticut, you're probably looking at, $195, $200 a square foot to build. Mm-hmm. And, we're doing the math on, various land projects that come across our desk. And we're like, unless we're going to hold it for 25 years, I don't see how this goes cash flow positive and finance it for 40. I don't see how these are, viable cash flowing deals, unless you're buying the land, unless you're getting the land for free. It's really hard to.
Not happening in Florida.
No, it's not happening anywhere. I keep trying to ask landowners to give me their properties for free, and they just won't do it. Well, they're funny. People are funny that way.
The nerve of those guys.
I know. It's a horrible.
I'm gonna give back a little. Come on.
So let me ask you, one of the things that I'm always mindful of, and you've been doing this for quite some time at a very high level. And you're obviously an accomplished entrepreneur. I'm curious, what do you think, when you meet people along the way, people that would love to get into this business, what separates them, the people that are stopping you on the street or meeting you at a networking event or whatever, saying, man, I would love to do what you do. What separates those folks from you and me and other people, that are actually in this business and doing okay?
Yeah, I think, and it's not just our business. I think it's people in general. And I was probably guilty of this early on in my career, and that is, you kind of got to get out of your own way. And most people don't know how to do that because you don't really understand what that means. Right. You just don't. I mean, I was taught to go to school, get a good job, get a good corporate job. You'd be set for life, do it. And
me too.
The world changed, nothing against my parents, but the world changed. And when you make that switch from being an employee to being the person that owns the business, your thinking couldn't be any more different. I mean, it is completely different. And what I think people do is they have trouble imagining themselves, like we've raised almost $40 million in the last 2 years.
Wow, congratulations. It
would be hard for me 15 years, 20 years ago to imagine that I would be making that statement. Like, I'm that guy. So it is very hard for people to get their hands around that because they don't know what it means. And sometimes people are just scared. They're just like, I don't know, man, that, because another thing I was taught, they fly under the radar. Nobody will notice you. It's all good. That's what you want. A nice, easy life. Nobody notices you. And you can't do that and do the things that that we're talking about. So it's most of the time it's people.
Yep.
Now, what if you can just get them to take little steps? And what happens is, you know, you look at any successful person and they will tell you, you see that successful person today after they've made 10,000 little steps along the way. They will tell you that journey was not pretty.
Right.
It didn't, there was no certainty that if I just keep doing this, I will definitely be that amazing superstar. And it's just really hard for people to understand. If I can just get them to do a little bit, and really roll up their sleeves and do the hard work, then they'll get there. And next thing you know, you're looking in the mirror and you're like, wait a minute, I'm that successful person. Damn,
look how
what just
far I've
happened to me.
right? Yeah, exactly.
Look at what just happened to me. That's the amazing part.
I couldn't agree more. It's that incrementalism, right? It's, you know, I mean, even if you're trying to improve your health, right? You're not going to run a marathon day one. You're going to run half a mile or a mile, and then you're going to run 1.1 miles, and then you're going to run 1.3 miles. And over the course of, you know, I don't know, 6 months, you're going to be running and you're going to realize, oh my God, I just ran 14 miles.
I was going to say, I'm up to 2 miles now.
Right. Yeah. Well, that's me. Right.
Right.
But, you know, but the other part of it is, it's interesting is that the, you know, I think that what's the Tony Robbins state? You know, people overestimate what they can do in a year and grossly underestimate what they can accomplish in 10 years. And I think that is spot on and exactly what you were just saying. Right.
Yeah, no, you're exactly right. Well said.
Yeah,
I didn't know that was Tony Robbins. I've heard that a number of times. I didn't know that he was the source of that. That's cool.
Yeah, I'm pretty sure he was, but I've read 9,000 of his books, so it's in there somewhere. I couldn't tell you.
Okay.
Yeah. So, you know, and the thing is that it's a bias towards action, right? It's just doing that one thing today that's going to move you just one more step down the path, and pretty soon you're all the way down that path, and you're Ken Gee, and you own or manage, you know, thousands of units. And
well, I have a long ways to go. I'm still on that journey. Just like
exactly. Right on.
We are always, you can always find somebody bigger, better, stronger, more successful.
Without a doubt. There always is, right? Yep. So in terms of, you know, the capital raise and what you've done over the last, you know, 2 short years, you know, what caused you to change or evolve your business to go from, I mean, it sounds like a lot of what you were doing was internally financed, or maybe it was like a close friends and family type of JV type rounds. But what made you decide, okay, I'm going to launch a fund and I'm going to raise money, you know, in that way, which is, you know, it's a very different conversation with an investor, right?
Yeah, it sure is. So it was probably more than a couple of years ago we started syndicating.
Yep.
And it wasn't until well, I don't know. We just decided that we needed to grow. I just decided in my mind it was time for me to grow. There were a lot of people that were bigger, better, smarter, more successful than me. And, you know, you start to think to yourself, wait, there's no reason I can't do that. Let's just go do it. Right on. What are they doing? You hear model, mimic, and I can't remember the rest of it, right? But go do what they're doing. You take a little bit from a lot of very successful people is what I try to do.
Yep.
Because you don't want to become somebody else. Don't do that.
Right.
That is cheesy. We see that, you know, they see that all day long.
Right.
Pick little bits and pieces from a bunch of people, internalize it, figure out how it is that you're going to be, you know, you're going to incorporate that into your life, and then do it. And that's what I did. Is I just said, you know what, we went full on without, you know, external marketing. I mean, we invested heavily in online marketing, and just having this conversation with you and getting the word out. You know, 3 years ago, there's zero chance you would get me on a Zoom call or a podcast. I would have laughed at you, like, stop it, you're being ridiculous. But wrong answer, right?
Right. Well, I mean, and I think I blame COVID for a lot of that, right? You know, because I think the world fundamentally changed, you know, when we
No doubt about it. No doubt about it, Ed. No doubt about it. It changed me.
I have virtual cups of coffee with people all over the world on a daily basis that I would normally have, you know, up the street at a Dunkin' Donuts or a Starbucks, or, Pete's Coffee or whatever. So I'm not offending anyone out there who's
right.
aficionado. But the fact is that those coffee meetings are now, a lot of them are, heck, most of them are virtual. Right.
And I'll tell you what I learned from those. A lot of people love them because you can just accomplish so much more.
Absolutely.
Because when you meet someone, say on LinkedIn, and you want to connect and you get together on a Zoom call, you can very quickly decide, hey, can we work together? Can we help one another somehow? And it doesn't turn into 3 hours and, travel and everything else. It's, 20-minute on and off and next person.
Yeah.
A lot of people have told me they love it because they can just get so much more done in a day.
I can meet, whether it's a potential partner, a contractor, a property manager, a potential investor, whatever. You can have 8, 10, 12 meetings a day. And
I can look you in the eye and I can see your facial expressions and I still get all those benefits. Yeah, no, I love the fact that we can do this. And I still like getting together in person.
Yeah, right on, but then I won't get my COVID all over you, and everybody's
right. Yes, exactly.
So, I'm curious. You had mentioned, I think it might have been before we started recording, that you have had the benefit of a lot of people helping you, and that's one of the reasons why you're so generous with your time. And I thank you again for that. So I'm curious. Of the people that have given you advice over the years, what's the best advice you've ever gotten? And I'm actually curious who gave it to you.
Yeah, boy, I get advice from so many people. I would say within the last several years, probably the person that gave me the best advice, guy you probably heard of, Grant Cardone. He said, guys, you got to think bigger. Yeah. You are thinking way too small. And it takes a while for things to sink in with me. And so that has proven to be that might have been what has changed. We've grown more in the last 2 or 3 years than we grew in the last several, prior to that. And so, but we still are doing it in a controlled fashion. I'm always careful because I don't want to be that guy that grows too fast and doesn't have the foundation under him. So we spend a lot of time and energy making sure the foundation's secure. But that's probably the best advice. Other than that, I get so much advice from someone. I mean, I just try to get little pieces here and there. Just like people, hopefully listening to this podcast, maybe I hope to say one thing that sticks with somebody and it maybe helps them. If that happens, that I'm super
mission accomplished.
Yep.
Right. Exactly. Yeah. So I'm, I know, in a lot of cases, and I suspect in your case, leaders, I fundamentally believe leaders are readers, right? And but these days, the way technology works, you're not necessarily reading, right? I mean, I consume, I try to read a book a week, but I'm listening to it. I'm not reading it, right?
Yeah.
And so I'm curious, whether it's podcasts or online videos or seminars or reading or listening or whatever, how do you as the the leader of your company, how do you consume information to apply to your daily job? And the other question I'm curious about is who are you paying attention to these days?
Yeah, so to answer your question on how do I get this information, I get it from all of the above.
Okay.
I would say it's less actual reading. It is a lot of video.
Yeah.
A lot of I love podcasts. I love these online webinars. I just participated one over the weekend that was fairly low key, but man, the speakers were incredible.
Yeah.
And I tuned in the day before I was supposed to speak because I just want to get a feel for how is it flow and things like that.
Right.
And 4 hours later, I'm still on this. I'm still on it. I'm thinking, wait a minute. Right? I just checked, and it's just there's just so many people that now have the ability to share what's helped them be successful. Right. And for me to think for a minute that every one of those people that they don't have something to contribute to me to make me better would be just arrogant, right? I mean, that's what I think. And I just try to consume as much as if I can. It's probably too much because it's just so much. I mean, it's coming at you nonstop. So that's how I get that. I love these online webinars though.
Yeah, me too. So how do you guard against being informationally overloaded?
Yeah, I like to make notes. I use Trello a lot, so I try to make notes in Trello. And then what usually happens is when I'm on a plane, I go back and I start to digest. And as I'm learning and thinking about this, I'm trying to say, okay, how could I apply this to my business? But what you have to do is you really have to do it in a controlled fashion, in a manner that makes sense. Otherwise, you're just kind of jabbing at your business, and you can't do that.
No.
Right. You got to internalize this, see how it all fits together. Okay, yes, and this makes sense. And then you can go incorporate that into your business. Right. I would say, though, that what I focus on now at this point, because I've kind of learned that your business can only go as far as you personally are able to develop. Right. If you think about that, whoever's at the top, I mean, you're at the top. I mean,
yeah.
If you don't grow, if I don't grow, if I don't improve and focus on self-development, all the good people underneath me, well, if they're not able to grow, they're good, they'll leave. They'll go somewhere else. So that pushes me to get even better.
Right.
So that's what I spend most of my time and energy on, is trying to become a better leader, a better person, a better person at making them successful. That's the big change in your life as you go up in an organization. We do what we do, but your time is more spent trying to make the people around you successful. Yes. And if you do that, good Lord, I mean, look what you just did, right?
Right.
I mean, first of all, it's an incredible feeling to be a little bit responsible for somebody else's success.
Sure.
It's even more cool when you realize, man, the business that I run is getting all the rewards for this.
Absolutely. And and that's, like you said, it's so gratifying to see somebody, reach their perceived potential and then realize, wow, that person actually has way more to give. Right. All right. So let's start working on that.
They surprise themselves all the time, man. It's awesome when I see that.
I know, it's so much.
And then we keep reflecting on it. I said, do you remember a year ago you thought? They just shake their head. They're like, man, I can't believe what I'm doing. And then you're doing something right.
Yeah, that's how you got it right. Absolutely.
Yep.
And so, with that, obviously that helps you serve your residents more effectively. It helps you serve your investors more effectively. It helps, it makes you feel good, right? You put your head down on the pillow at night knowing you're doing a good job, right?
Yep.
It grows your company. It provides opportunities for people to grow. My goal when I hire somebody is I'm going to teach you how to invest in real estate. As part of your job, you're going to have to learn everything we do. And the reason being is that, first off, we're a small company, right? So, we're only 10 people. And so I want everybody to be able to do everybody else's job just in case somebody gets the flu, right?
Yeah.
Or goes on vacation.
Sure.
But the other part of it is that I really want them to one day come to me and say, you know what, I just bought my first apartment building and I'm leaving. I'm sorry to say I'm leaving, but I'm going to start my own company, and that'll be a happy day for me, right? That'll be all right. Mission accomplished.
Yep.
Who on the team is replacing you? And we got to figure that out. But
who's next?
Yeah, that's fine. Next? Right. Exactly. Right. And those are good days. So Ken, in terms of where you are in your journey, is retirement a possibility, or are you just having too much fun?
No, I'm not retiring anytime soon.
I didn't mean soon. I mean ever.
Well, I don't know, because I enjoy what I'm doing. I mean, I like to have my own time. I don't want to be the one in the weeds all the time. Right. I don't know. What am I going to do when I retire? I don't know.
Yeah. Somebody asked me.
I hadn't even, quite honestly, I have given it zero thought.
Yeah. Somebody asked me that. My uncle asked me that a while back, and I'm like, what do you mean? Why would I? I'm having way too much fun.
Yeah. Then it made me realize, wait a minute. How old am I? Do I need to be thinking about retirement?
I'm only 105 years old, so I got plenty of time.
Yeah.
So, it's, no, I thought about it and I was like, I'm literally making money, making a living doing my hobby. Yeah. So what am I going to do? I lack the talent and skill to go play golf at the senior on the senior level.
Sure. Yeah. Me too. Yeah.
So, I guess, this is my superpower. So why not? Right.
Yep.
So Ken, I've really enjoyed our conversation today, and I thank you for your time. and your wisdom and all those gold nuggets you've been dropping along the way. If someone wants to learn, more about you, or get a hold of you, or learn
Sure.
more about KRI Partners, or the funds that you're building, what's the best way to do that?
Yeah, so go to kripartners.com/invest.
Excellent.
And that'll lead you to a page where you can see our fund webinar. You can, see our entire track record that's been vetted by Verivest.
Yep.
You can see how we do what we do, and then of course set up an appointment to talk with me about if it's something you're interested in.
Sure.
kripartners.com/invest. That's the best
Excellent.
way.
Thank you, Ken. Hey, Ken, I have one more really important, vital question to ask you, and that is,
Okay.
Are you a Bearcat or a Buckeye?
Buckeye.
There you go. All right.
Yeah.
Ken Gee, thank you so much for your time today.
Yeah.
It's really a pleasure.
Thanks so much for having me.
All right.